Today we're going to talk about the wild ride that we've seen in the stock market over the last few days. Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Thursday, February 25th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Let's start over on the right side of the chart here. This is just today's trading, and the first chart that we're going to look at is a 5-day, 5-minute candlestick chart of the S&P 500. So each candlestick does represent 5 minutes of trading, and this is just today. This is Thursday, February 25th, and you can see we pretty much sold off all day long. We closed down 2.45% on the S&P 500, closing at 3829.34. And over the last 3 days, you can see this kind of a round trip that we have made, where on Tuesday we gapped down at the open, undercut this 3820 level, which is where that blue line is set. And 3820 is a pretty important level, so kind of keep that in the back of your mind. We'll be talking about that on several charts today. But we undercut on Tuesday morning here, the 23rd, undercut that 3820 level for just a couple of minutes. And then it looked like we were going to be fine. And you can see the market just kind of edged its way higher and closed right at the highs yesterday on February 24th on Wednesday, but everything unwound today, and what it took us 2 days to gain, right, from where we bottomed kind of at the open, if you will, just below 3820 on Tuesday morning. So Tuesday, Wednesday, we rallied, looked like everything was going to be just fine, and then today we gave it all back. So we have seen a tremendous amount of volatility in these markets this week, and based on some of the things I'm seeing, I'm not sure that it's over, guys. So stick with me and we'll talk about that. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that goes back to the last trading day of 2020. This is December 31st over here. The reason I wanted you guys to see this chart is this pretty much just tells it all, okay? This is every hour of trading so far for 2021. And what we can see here is we traded in a range from 3820 to 3860 for several days in January, and then again at the beginning of February right here. Well, that's exactly what has happened this week, is we got sucked back into this trading range between 3820 and 3860, and we got down there for just a few hours on the 23rd. We were able to pull our way back up out of that, but then that rally attempt failed and we got pulled right back into this trading range. So this 3820 to 3860 range is going to be extremely important, and whichever way we break out over the next few days probably tells us what's going to happen. We might get lucky here, and maybe this 3820 level, there is some support right here where it was overhead resistance for a few days back in the early part of 2021, the first few weeks of January, and then it acted as support right here. Of course, we broke down at the end of January, kissed this 3700 level, and then for the month of February had a really nice rally going on here, got clear up to this 3950 level, got rejected right here, and we got, again, just sucked right back down to this 3820 level. Tried to rally out of it. Nope, got pulled right back into it. So 3820 is almost acting like gravity, right? It's just pulling us right back into this little window. But with the veracity of the selling today, and I'll show you that it wasn't just in the S&P 500, so stick with me. I'd be surprised. It could happen, guys, but I'd be surprised if this is as bad as it gets. I hope it is as bad as it gets, but what we already know is, based on what we saw right here, and really where we've come from the beginning of, right at the beginning of the year, right around this 3,700 level, this bottom blue line, if 3820 doesn't hold, it would make sense to me that we come back down to at least this 3,700 level, okay? So be prepared for it. I think it's highly possible. Nobody knows for sure. I have zero ability to predict the future. All I can do is read charts and look at statistical probabilities. But based on what I'm seeing, and I'll show you here over the next few minutes what I'm talking about. And guys, as you're going to see over the next few minutes, there just wasn't any place to hide today, okay? When you get into these types of sell-offs, there is no place to hide. What do I mean by that? Every single sector of the S&P 500 was down today, as you can see here. Every single sector, also, pretty much everything, right? Small caps, large caps, everything was down. Triple Q's down 3.5%. The DIA that tracks the Dow Jones Industrial Average was the quote-unquote best performing area of the U.S. stock market, down 1.62%. This is just today. This isn't for this week or whatever. This is just today, all right? So this stuff really hurts. Well, what about high-quality bonds, right, for anybody that's an asset allocator? Nope, those things aren't helping you. The IEF, which tracks 7 to 10-year treasuries, down 1.33% just today, and the TLT that tracks the 20-year plus treasuries, down 1.63% just today. Guys, you've got high-quality bonds selling off with all of the equities. Traditional allocations are not going to work. Please stick with me. This is so important for you to understand this. And what about alternatives or international? Okay, nope. You can see the EEM, right, the Emerging Markets ETF, down 2.25% today. The FXI, China Large Cap, down 153. The gold miners down anywhere from 4 to 5.25%, whether you're large caps or small caps. GLD itself, that tracks gold, down 1.88%, and silver, SLV, down 2%. So, guys, any of you that have been watching my videos for a while, following my work, know that I've warned you about the fact that these markets have changed, right? This is about as difficult as I ever remember these markets being, and it's not going to change, guys. I'm not just talking my book. Stick with me. This is super important. If you want to win going forward, we're going to have to take a different tact to investing. There isn't any choice, all right? It's just the way the markets are set up, right? Interest rates are too low. Everything is super highly correlated. So we're going to have to take a different approach, and this is where I encourage you, please, 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 you need a risk management model, a system in place to help you manage your stock market risk, all right? We don't have any choice these days because, again, even high-quality bonds, right, are selling off. And this is just today, but we can go back, let's go back a week. I mean, look at that. I can keep going back, guys. It just keeps getting worse, all right? So, whether you're a full-on equity person or a 60-40, 70-30 investor, 401k, IRA, just your margin account, it doesn't matter. You need a risk management system in place to help you manage your stock market risk. Now, I spent over 20 years of my life developing a system for myself. It finally came together in 2017, and I'm telling you, it really, really has helped me, okay? And remember, I'm a former financial advisor. I'm a former VP of a major mutual fund company, guys. I've got a lot of experience with this, and I needed something to help because these markets things just don't work like they used to, all right? The bottom line is I'm making this information, my risk management system, available to you guys at a very, very affordable price, okay? For most of you, I promise you, if you look at it in the right way, it's costing you money not to have this information, all right? So please at least consider what I'm offering here, okay? Now, pay attention to the next 16 minutes or so of this video because I'm going to tee up some information about my system. It's called Simple Market Signals. I spent over 20 years of my life developing this model, all right? And it really works, guys. It's market-based, okay? And it really works. So please, I spent 20 years of my life developing this. Please spend the next 16 minutes or so of your life just to see if it might work for you, right? Just to see if it might be right for you. Okay, so with that said, please pay close attention to the balance of this video. Thanks for being on this video with me, and I will see you in the next video. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop simple market signals. I developed simple market signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors, and what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how Simple Market Signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then, of course, the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how Simple Market Signals could have helped you during that time. With Simple Market Signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for Simple Market Signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, Simple Market Signals may help you a little bit, but the reality is that the best fit between Simple Market Signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an emailed newsletter, so we will have to have your best email address on file, and make sure this box is checked because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would get in the habit, I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule. And the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition, so whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least 1 or 2 emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly emailed newsletter, which goes out on the weekends, that will include all of the content that we just talked about, plus you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.